Back everyone to the Store Hero podcast. Delighted to be joined by James from Oil, back again for our second episode where we're diving deep into the origins of a new e-commerce brand, Oil, and everything that entails. So, James, since we last spoke, there's been a couple of updates on your side. I know, first and foremost, you've got an investment in the door. I'm sure that's a nice one to get over the line.
Yeah, it's a big milestone for us. So in 2022, we raised a pre-seed round of about £200,000. And that money essentially went into building the infrastructure. You think 200,000 is going to go a long way, but it didn't go as far as we had hoped in terms of longer runway period. But like essentially what we built with that pre-seed capital was a great brand, great infrastructure in terms of our logistical setup, manufacturing base, Shopify store, all that good stuff. And in November 2023, we kind of started closing in on our seed round, which we were lucky enough that Benrex, who are our lead in the pre-seed, they're a London-based venture capital firm. They've come with us again and setting the term sheet. We're allowed to raise 600,000 pounds, so around 700,000 euros on this round. So we have strategically, we've raised 50%, which we have banked at the moment, and Enterprise Ireland have come in, which is an amazing investor to come in on board with this, which gives us a lot of confidence in what we're doing, as well as a number of key angel investors. And we strategically decided to keep 50% of the raise to crowdfunding platform Seeders, which is actually going to go live within the next week. So we're just doing like a pre-registration with them at the moment. So the reason why we're going crowdfunding is just to get the name out there more and get a lot more people investing in small amounts within the company. And I suppose as a marketing tactic, we hope that that's going to get our name out there into the marketplace more so.
Definitely. 100%, and I suppose it's something that people may have traditionally looked at with the likes of kind of a Kickstarter, a number of years ago, whereby ultimately you're getting some sort of reward. But this is even kind of the logical next step where you're actually getting a piece of the company and a piece of a startup that you can support and really bet on the right horse in the early days in that context. Maybe just to kind of give people who may be interested in the Seeders campaign a bit of context, and maybe a good opportunity just to give everyone a recap of what Oil is, what is the actual brand and the product that you're focusing on.
Oil, the brand name itself is an acronym. So it stands for Optimize Your Life. And it's also a symbolic oil in terms of, well, there's a lot of different symbolic images that come with the term oil. But there is natural oil in coffee itself, which is very, very healthy. And also we wanted to be the antithesis of the real oil, which has got a lot of negative connotations. We want this to be something that's extremely good for your body and good for you. It's going to help you essentially become the best version of yourself through habit stacking. So that's one way of looking at it. The product itself is the medicinal mushroom-based beverage, something that I started making for myself back in 2020, and it's kind of grown its own legs since then. When we first started talking back in November, we had 6 different products, and now we have whittled it down to one single SKU for a number of different reasons. I don't know if you want to go through all that now, but
definitely, yeah, I think that's a great jumping off point. I suppose ultimately, as part of this series, really in the context of Oil, we want to actually follow our own process around that, what we would call the Store Hero profit first flywheel. So looking at the key components, as you can see in your screen here, of how we're actually in all the various component parts that make up running a profit-focused e-commerce business, whether it's number one, planning, understanding what our core unit economics are and what are our guardrails. From there, attract, how are we effectively acquiring customers or getting people to our site in the first place. From there, convert, how effectively is the site doing its job then in order to get people as far as a sale with a strong average order value. Delight, how effectively are we retaining customers? Are we giving them a positive service and a product they're really interested in, that they're not going to only come back, but they'll actually tell their friends about it. And then finally, optimize. So this is an opportunity to really look at the overarching business there, look at opportunities for margin optimization and see, okay, are we taking a product and a marketing funnel and turning that into an overarching valuable business? So really the focus we want to dive into today, and again, focus is relevant in a couple of contexts, especially in the context of oils. So we'll touch on that in a second. First and foremost is that planning stage. So to kind of correct me if I'm wrong, James, ultimately, not only before the new, let's say, V2 of oil, that V1 had a number of different SKUs with a number of different form factors. Probably brought a lot of kind of, naturally you're going to want to test and experiment with any new brand and see what people are responding to. But I think you made a point on our last conversation that it added probably a lot of complexity in the early days that was difficult to get a sense of what was actually working and what wasn't. Maybe you could speak to that.
There was a lot of complexities, not just from a marketing perspective, but also from manufacturing and logistics was quite difficult to control in terms of the MOQs specifically and the amount of capital outlay that was involved in some of those MOQs, which meant that we had to hold a large quantity of stock at any one time, especially as a startup business where we didn't necessarily have the traffic and the customers who were buying large quantities. Then there was the kind of technical kind of issues that we started to only become apparent as we started to sell the product and get reviews from customers, specifically around pods. The Nespresso compatible pods that we decided to initially launch with was on paper amazing because there was 10 million machines plus sold in the UK over the last number of years. We knew there was a huge demand there. We know people are using pods, and we were the only specialty grade coffee and specialty grade medicinal mushroom coffee in the world using pods. So that was a unique selling point for us. However, what we didn't understand at the time was the machines that we couldn't control. So the Nespresso machines that were being used varied in age profile, and that age profile distorted the flavor profile of our coffee. So older machines tended to make the coffee taste worse, and the newer machines extracted the coffee really, really well. So it would get the kind of optimized flavor that we were looking for. So we ultimately made the decision to get rid of pods because of that, the nature of something that we couldn't control. We also brought on 3 SKUs of ground coffee version, which started to go really well. That was kind of the original version that I would experimented with myself back in 2020 when I was just making it for myself, which is ground coffee blended with mushrooms. And so we decided to create 3 different SKUs with 3 single mushrooms in each product. And that was great, but it's also an MOQ issue where you have to have large quantities of stock being held. So kind of the big change and the biggest decision I think that I've had to make to date is changing or ultimately discontinuing those 6 individual SKUs, and whilst also having a lot of stock on board, and to take the risk of going down the road of where we are now with one single product. However, like having learned what I learned on the product side is that I decided to go back to basics and make the product that I was making for myself and make it kind of the best product on the market. Although in saying that we had already got the best product on the market with our 6 SKUs in terms of we were already in a unique space, but to use a specialty grade coffee that tastes fantastic. We won a great taste award last year for the product itself and the taste profile, but also then to mix 3 very potent medicinal mushrooms in with that, rather than having them separated over 3 different SKUs. So we're targeting multitude of different health benefits in one bag, which is essentially what I'm drinking every morning now. And I know, Arliss, what you're drinking every morning.
Definitely, I've been sold, both literally and figuratively on the concept. But I think one interesting point there is, as you said, there was not only 6 SKUs between the bags and the pods. There was 3 different medicinal mushroom products, each serving a different focus. Literally, one being focus, one being performance, and one focus more so on health. But in reality, I know in our previous conversations, the kind of ideal customer profile that you're looking to target actually cares about all those 3 things. While there's products for different kind of parts of their life, they're looking for an overarching blend that's going to help them. Whether it's busy professionals, for example, again, they're going to need to they're going to want to look at their health, look after their health and also maximize their potential. So it's kind of an interesting balance to keep. But yeah, definitely a lot of really valuable context there, I think. Not trying to take over the world overnight, starting simple with a clear, much more concise message. So coming into 2024, we now have the Focus Blend, which blends those three medicinal mushrooms with specialty coffee. Again, as compared to other products in the market, you're ultimately not selling yourself as a replacement for coffee. You're actually, because of your background, you can ultimately build a coffee component in, but find the best of both worlds with the medicinal benefits, but also that core quality coffee that people are looking for. So just maybe to kind of bring the conversation on a little bit from there. I know from our side, when we jump into the store hero side, we did see through some initial audits that practically, I suppose, through some additional audits, we saw practically the way that the products were set up with all those different SKUs, the way it was priced and the kind of underlying cost structure meant that it was actually quite difficult in order to get profitable based on that setup. So we didn't have as much of a road in front of us to see, okay, this is exactly how we could scale all these 6 SKUs, let alone one SKU. So one piece that people may find interesting is we can actually dive through the numbers here and get a sense of what that underlying kind of unit economics looks like for the previous V1 of oil. So I can talk through this, and James, feel free to jump in if there's anything in terms of additional context you can give. So everyone should really be looking at this in the context of their own business. They're going to have that sale price, they're going to have a gross profit per order, and they're going to have a cost per acquisition and all those various costs that they need to put in. And realistically, some businesses will look to be aggressive. They'll want to be profitable on the first, or alternatively, they might be more conservative, I should say, and want to be profitable on the first order. Some, there's a logical explanation and a rationale as to why they might want to push out. For others, it's one of these things that it just kind of happens. It's not necessarily a logical rationalization as to why we're waiting until the third, fourth, fifth purchase in order to actually get profitable. So again, this is really an interesting exercise to run through. So as everyone can see here with V1 of oil, we've our 30 coffee pods here. We've a sale price of £31. And between that, we naturally have a number of different cost of goods. So we have $8.50 between the specialty coffee, the additional mushroom, the blending process, the packaging, landed cost, and that's really something that we would recommend people look at is their landed product cost, not just the cost of the raw materials, whatever the case may be. From there, you have the packing and fulfillment through a third-party logistics provider that you're working with previously. You have the shipping fee. So that was ultimately a cost that we were incurring. So in terms of the free shipping side, ultimately one kind of key piece that we see with brands a lot of the time is free shipping is just taken as a bit of an expectation, where in reality, it is a relatively significant discount that you're giving. What was the kind of thought process on that? Or had you found that that messaging had made sense, or even as maybe as a consumer, maybe you could speak to that around that expectation?
Yeah, I think there was a couple of different reasons. Without testing anything, I suppose I, as a consumer, would always prefer when there's free shipping included. So you're more likely to go and buy the product. I think the second, probably more practical reason is because we've only got one product. We can't upsell them on any other products at the moment because we don't have a product suite where we can actually then incorporate the free shipping bar maybe or something like that. But when we have one product, and especially what's at the stage that we're at, we want people to press the button and try it. We don't want anything kind of discouraging them. So we factor that into the overall costing at this stage. I think
Definitely.
definitely as we go forward on our journey and as we start to increase our product suite, then maybe we can look at incorporating shipping as a cost back in.
Definitely. I think it's ultimately something for most people, I think, would agree that it's an expectation there, and ultimately making sure that it's factored into the unit economics is probably a key practical benefit of looking at this, or something that's ultimately really important to do. So from here, as everyone can see, ultimately you have that shipping fee built in, and this is again in the V1 version of oil. You have the transaction fee, and then you have those additional discounts, which puts us in a position there where we have a gross profit per order, or a cost, kind of a profit after cost of goods of £9.57. So ultimately, there's one key cost that's remaining then in order to deliver that product profitably to the customer. and that's that I suppose cost per acquisition, whether it's via paid ads directly, and it's something you can measure a little bit more tangibly on a metric, or alternatively, it's a blended, division of all your marketing costs associated with it. So because that's the remaining cost left on the order, that's basically saying, okay, if we want to be profitable in the first order, that's that £9.57 is the room we have to play with then in order to acquire that customer. So anyone who's been running ads on social channels over the last couple of years has really started to see that that is easier said than done a lot of the times. Years of maybe cheap customer acquisition costs through the likes of Facebook and Google probably bred a lot of bad habits. I would think that again, it's when the opportunity is there, you're going to take it and you're going to go to scale. It makes absolutely perfect sense. The challenge now is as those costs have gone up, people need to look a little bit closer in terms of those numbers and see it in a bit more detail. So not only, let's say, for example, on that second order, on this kind of V1, we're willing to say, okay, let's wait until we're at the point of kind of second order profitability. So at that point, we can then double that and say, okay, let's take the margin of our first two orders and attribute that to acquiring the customer. Then that gets us up to £19. Now, the challenge was and is that in the existing version of the oil brand, in that kind of testing and experimentation phase last year, the cost per acquisition was much higher. And ultimately here, because this is a once-off purchase, it's really putting a lot of weight and really relying on that customer to come back again and again on their own back with our assistance, of course. But it's again, in this, depending on what your cost of acquisition is, let's say it's around £40, we need people to come back 4 times, not through an automatic subscription, off their own back. To get to the point where we're break even on that customer, which is obviously kind of a high bar to keep, and ultimately you have the kind of cash flow implication of that most businesses will also face as well. I know, James, you mentioned in our conversations that that cost per acquisition in the kind of early testing phase was always a bit of a challenge with different agencies.
Yeah, and as part of the learning curve as well. I think when we had gotten our funding and when we were ready to bring the product to market, there was the big quandary, particularly when you're essentially a novice in the space, as I'll
Sure.
admittedly say I was, even though I've 15 years of business under my belt. Whenever you're trying to source an agency, I didn't realize what a massive choice there is, essentially, whether you're going from a freelancer to a large scale agency. And there's huge cost implications through that kind of process. So there's probably 3 different tiers, I would say 4 different tiers of agencies, which I didn't really realize. I thought an agency is an agency. They're going to get you from point A to point B and job done. But when you're paying £3,500 just per month for the retainer, then everything else on top, and then sometimes they want to take a percentage of your ad spend on top of that as well. When you're at a standing start, that can be very, very difficult to maintain that kind of the cost of that. So that's kind of where we found ourselves. We actually went through the whole list of different types of agencies, from guys wanting to charge us £15,000 a month retainer, down to, we went back to a freelancer. That wasn't really working for us either. And we went kind of to a mid-tier, and kind of that's where we left it, kind of towards the end of last year, before we kind of met you, came on board with you guys.
Definitely. And I think I know you're working with a US agency on the paid advertising side at the moment, and ultimately we can really tie that all together at the end of this episode as to what the implication of all this stuff is, because it's definitely a consideration. The one big part is in that situation is if you're a brand already doing 6 figures a month, therefore you can divide that 3.5K management cost across all your orders and profitably include that as a cost of doing business, as nearly like a part of your cost of goods, as a cost per acquisition. The challenge is, as you said, if you're at a standing start, the only way for that possibly to work is actually scale your ad spend very quickly. And that's also very risky, because ultimately it's very make or break. You have to get to a high level of spend and a high level of profitable spend, so that the management costs of the agency doesn't offset your ads. So one thing that we've really tried to define is, okay, again, in this situation, and just to tie it back to the metrics here, that £9.57 or £19.14 is probably to give to be fair to some of those agencies, it's probably before you're at that point of product market fit, it's a small there's very small kind of wiggle room, I suppose, as to how to actually achieve that number. So one piece we did is really took a step back and re-engineered kind of the unit economics of the business. So number one, as you can see here, that ultimately meant looking at the overarching product itself. So again, a much better product that's one of that actually takes the same fundamental principles as to why that V1 product was great, not only for customers in 2023, but even for yourself since 2020. And has put it and kind of formulated it together and packaged it and priced it in a way that kind of suits the audience that you're serving. It's one easy, clear product. It solves those kind of multifaceted areas of health, performance, and focus. And ultimately, you have the Great Taste Award as a few better ways in terms of actually giving that indication. So, as people can see here, one piece we looked at is instead of primarily focusing on a once-off purchase, we recommended to potentially look at a subscription as the first port of call, and reprice it on that basis as well to be more of a starter pack focus. So you can see here the focus actual product has a sale price of £39. The product cost, packing, shipping, and transaction fees. We've seen a little bit of a saving across those, some margin optimization from working with a better and a more cost effective 3PL as well. I know that's a move you made, and also repositioning that initial purchase as a starter pack with a V60 dripper included. So on that basis, our gross profit per order on that first order is now £16.60. Even before we get into discounting or anything like that, we have more room to play with. And you can see here on that because it's a subscription, not only can we much more heavily rely on that second order coming through rather than leave it up to chance, we can also know that we won't have to pay for that V60 again. So on that basis, the second order profitability gets us up to £41. So very quickly, we're in a position where we've 2.5 times the room in terms of our CPA to play with only a couple of pounds change in kind of top line price for the customer. We're still including shipping as part of that offering for the once-off customers, or for the subscription purchase, I should say. And then as well, what we also looked at is potentially repositioning the single product purchase into one that has a better place as part of the funnel. So as people can see here, that sale price is actually lifted up to 49. So that's on purpose. We actually want to give people a little bit more of an incentive to go for the subscription option, make oil a part of their habitual routine, and on that basis get the benefits of the product and be in a much better position to kind of reorder and be a good advocate, and be brought in on the kind of community that's being built as well. So as everyone can see here, same fundamental cost of goods without that V60 component gives us £34.71. Now, naturally you might think, okay, well, that actually gives us the most room, but at the same time, it's a higher bar for a customer to get over. So at the end of the day, we know we're not kind of operating in a vacuum. We need to have a compelling offer that not only kind of serves that customer, but ultimately can be done so in a way that's actually gives longevity to the business, improves the business model, and puts us in a good position. So as the practical benefit of all of this is that agency that you're working with now focusing on the starter kit as the kind of, or starter pack, I should say, as that first focus. Assuming we want to be second order profitable, we now have £41 as a CPA. So some of the conversion ads I know we've been able to see within Store Hero are already hitting that mark, which is great. Other traffic-based advertising and kind of broader awareness growth is something that still needs to be factored in, and I'm sure we can touch on it in the next episode around that kind of a track stage in the funnel. But I suppose the hope would be here that this gives, again, it's probably less of us closing our eyes, crossing our fingers, and hoping we're going to work our magic, or anyone has got to work their magic to get that CPA down. It's more so saying, let's look at the reality. Let's look at the state of the union. Ultimately, we can see consistently that a CPA of £9 is going to be very difficult to hit. Let's engineer a solution in which we can actually afford a higher CPA. So I think probably fair to say, James, from your perspective, a lot more clarity as to what kind of room we have to play with, and obviously having more room to play with as well.
Absolutely, it makes all the difference, and I think that's kind of the clarity that I was missing on version one, especially getting into the agency territory where I wasn't fully taking control of the situation. And I think that this whole process has to be very collaborative between the agency and the CEO, particularly because I'm basically the only person in the company right now, outside of the agencies, etc. So I think the major difference in working with you is that we focused from day one on numbers, and that's kind of building the foundation for making better decisions and making us understand kind of uh, what kind of area that we can work within in terms of offering free shipping or offering the V60, etc. And
Definitely. Yeah, exactly. And that's the thing, like ultimately, at least it gives us some room as part of the store hero recommendations that the platform will generate. We have some room to play with. So even if we do want to look at discounting and stuff like that, it doesn't send us into a deeper hole. It's a greater incentive. And I think the kind of a big takeaway I'd leave for everyone listening who's looking at this unit economics piece in a little bit closer is you can ultimately understand the importance of even treating that cost per acquisition or that cost per purchase as nearly like a variable cost. It's something that needs to be factored in at an order level to know that you only want to spend extra and grow you and kind of scale your marketing efforts if you know that you're adding incremental profit. If an extra in a sale is going to leave some level of profit after marketing or even break even, as long as it's not sending you backwards. So I know, James, one piece that we can maybe touch on in our next chat, maybe just to kind of tease a little bit. I know you're working on a couple of partnerships to kind of start to serve that next part of the flywheel around awareness and building the brand recognition amongst that potential target audience.
I think as part of our overall strategy for developing our business right now is, aside from looking at the influencer side of things, we're focusing heavily on partnerships. And so whenever we're focusing on partnerships, we are looking for the kind of the biggest lever partnerships that we can work with. So we signed last week with High Rocks UK. For those of you who don't know who they are, they're kind of the fastest growing sports competition for athletes and for like normal athletes, as in people who are just going to the gym, not professional athletes. And but they're in 11 countries now. They're in 30 cities. They're getting tens of thousands of competitors per event. So we've partnered with them for their next big event in London, in the London Olympic Stadium in May this year, which is a 3-day event. So it's a huge opportunity for us to jump on the back of a business that's absolutely killing it in its space. They just signed Whoop, they just signed Puma as two kind of like lead partners. And we are coming on the back of that as their partner for Mushroom Coffee, which is obviously very complementary for them, and it's extremely complementary for us. So we have very, very complementary customer bases, and so that's a big one for us. We're also on a smaller scale. We're partnering with BXR gyms in London. That's kind of they're a global brand. They're in the Middle East as well, and so they're like a boxing kind of high end boxing gym. So we're doing some work with them this year through our PR agency. And I suppose on other sides of the flywheel, there on the PR side, we spoke about getting into GQ magazine last year. We got into Sheer Looks magazine 3 weeks ago, I think it was. So that's all big exposure for us. They're not necessarily drivers to immediate kind of customer purchases, but it's just building out that kind of general exposure for the brand and people seeing our name out there, especially in prominent magazines like that. Yeah, so that's what we're continuing to work towards. And it's not just partnering with anybody, it's partnering with the most complementary businesses, I suppose, not necessarily always in health, but that's what we're working towards.
A lot of great company there. Brands very aligned with the audience that you're looking to serve. I think that gives a good teaser as well as to what we'll be chatting about in our next conversation around, okay, what's the process to actually attract those potential visitors to your site or potential customers into your kind of ecosystem, into the conversation and towards the brand. Naturally, I suppose it's one of the key principles that's going to differentiate a startup brand from case studies. Was chatting on here with the people who've already made it, who have that brand awareness and can take that as a given. It's an important part of the flywheel, and we don't want to assume we always have as nice as it would be, a nice cohort of people ready to buy and ready to make a decision, bought in, and it's just a case of getting over the finish line. So some work to do before that in that attract stage. So yeah, thanks very much for chatting, James. I think I know people will find a lot of value in the specifics there, and looking forward to picking up in the next conversation as well.
Thanks, Carl. Looking forward to it.